guess I wouldn't be a Pan-African if I wasn't on about financial freedom. And what a better place to start than Zimbabwe. I mean, we all know the problems they've been going through. And with that, I think it was in 2020, 2023, 2024, I put together an article on Zimbabwe's digital gold currency. And I had asked the question, is it one better than crypto? Answer the question simply because it's actually backed by real value. So when it was first put out to the market, the currency was initially just a gold-backed currency on digital platforms. And then later on, the Zimbabwean Central Bank decided to roll it out as its official currency. So this currency had come to the forefront of Zimbabwe's financial war against Western sanctions and embargoes in 2023. This currency was for the purpose of savings and investments only. But in April 2024, Zimbabwe had taken a step further in scaling this towards a national currency called the ZIG, or the Zimbabwe Gold. This meant the financial instrument was no longer a small one, rather a currency that scaled towards first, cash, that is in the form of coins and banknotes, 2, electronic bank balances, and number 3, a national legal tender currency. This financial instrument since then has replaced the failing Zimbabwean dollar that was subject to hyperinflationary pressures. The Zimbabwean gold currency, the ZIG, looked to curb inflationary pressures that the Zimbabwean dollar was subject to by first backing the financial instrument with the actual gold, as well as foreign reserve, which is in the form of dollars. 2, it looked to curtail reliance on the dollar within the Zimbabwean economy. As we know, the economy still currently operates in a dual currency economy. And 3rd, it looked to restore currency in local money. Many people, especially business owners and others that were operating day-to-day businesses, preferred to trade in US dollars. The US dollar still dominates vast amount of daily transactions in Zimbabwe, unfortunately. The currency in itself was vastly devalued within the first few months of its inception, then by 50%. So it was pegged at a certain rate, and then other economic activities, or let's just say what was happening on the streets and how much it was being traded for, and just the confidence by the regular users of this currency had seen the ZIG traded at a specific rate. So the central bank had to meet, or at least try to meet, these rates by lowering the ZIG by roughly 40 to 50% within the first couple of months, 5 months after its inception. So from April 2024 to September 2024, its initial value was cut short by 50%. So at the time of inception, which was in April, $1 could buy 13 ZIG. And by September of that year, indicative rates of $1 got you around 25 ZIG. This valuation wasn't a significant loss, rather how the public had already taken to the new currency. The rates were more realistic to what diverging markets were trading the ZIG at. This was simply due to the fact that limited reserve currency in the Zim Central Bank were evident should one look to redeem value in foreign exchange. For example, if one wanted to get a set amount of US dollars by trading the ZIG in the central bank, there was only so much US dollars in the Zimbabwean Central Bank that I could redeem respective ZIG currency that I hold at hand. More or less, that's the That's the concept. In addition to the amount of gold that is actually in the Zimbabwean central bank. So realistically, I couldn't also redeem gold with the ZIG. So this obviously led people to trade the ZIG at lower rates than what the bank or what the central bank had originally pegged the ZIG at when it was first launched into the market. It is to say though, with that devaluation, it hasn't met any significant inflationary pressures that the former Zimbabwean dollar had met. And with that, it is still 2 years in, it's still at the same rate that it was at after the adjustments were made by the central bank. After that 50% devaluation that was done by the central bank to meet at the actual market rates. So in a nutshell, what mitigated the ZIG when it was first rolled out into the Zimbabwean economy was weak trust or low user confidence, which is understandable because we've seen what other currencies in the past how they've performed. There was also still a very strong demand for the US dollar. Just day-to-day transactions, business owners, they all just prefer to trade in the US dollar. And the third reason that the Zim currency was devalued was the reserves weren't strong enough to defend the peg in currency. So they had to meet what it was actually being traded at in the marketplace. Aside from the initial devaluation, the ZIG seems to remain very strong, and rates have remained fairly constant post-respective devaluation at the rate of 25 ZIG per USD. This, although still short-term, is a drastic turnaround from the Zimbabwean dollar. This turn of direction should set in motion policies that will better business environment frameworks, and should the currency prove reliable against inflationary pressures, the adoption of a larger economy would also be beneficial for the local player. So that's the local buyers, the local sellers, and just the average person involved in day-to-day economic activities in Zimbabwe. These people would find it a lot more convenient to conduct local trade in local currency as opposed to having to look for foreign currency in order to conduct their day-to-day activities. I believe this move by the Zimbabwean government and the central bank was a move that has stabilized the economy, and hopefully in the long run it should help them pick up business, especially with emerging markets looking to concoct towards economies as such, which are heavily embargoed by Western monetary policy. And more so, I think what matters the most is that it's less volatile than the Zimbabwean dollar, which went up to the trillions, if I'm not mistaken. Great move by the Zimbabwean government, great move by the Zimbabwean central bank. I don't think too many people speak about it, but it's high time now they trade that stability for actual business concoctions, international business concoctions that make sense for them. They need to start exuding trust to international stakeholders the likes of China, and are they to look to curb these embargoes, they should look at strengthening ties with BRICS plus countries, countries which are heavily reliant on the US dollar, countries which don't have majority of their stock tied to the US dollar, and just look to kick business on from them. We should look at making sure they have these international stakeholders' trust, and the best way to have international stakeholders' trust in international dealings and trade is obviously by making sure the currency continues to have this stability for years to come, and just make sure that their local economy is flourishing and they have an economy that is capable, that is conducive to investment.